So you're thinking about completing your 1040 US tax return to the IRS, but you have foreign income. Which is better? Should you have the Form 2555, which is the Foreign Income Exclusion, or should you use the Form 1116, which is the Foreign Tax Credit? Which gives you the best bang for your buck? Well, check out this video as I go through that exploration analysis. Hi everyone, my name is Simon Misiewicz, and one thing I have been asked about is what is better, the 116 or the 255? And I think it's worth just exploring what they are. So I'm just going to share my screens with you. As you can see, I've got quite a few screens. But the Form 1116 is the foreign tax credit. This is whereby you have got a credit for the taxes you've paid in a foreign country. So they could be United Kingdom, could be Spain, Hong Kong, various number of countries that you could be residing in. And as a result of that, you might have to pay tax in the United States. Well, if that's the case, you should be able to get a foreign tax credit. But we also have another form, which can be quite confusing, which is the 2555 form. Have I said too many fives? 2555 form, let's start that again, which is a foreign earned income deduction, for a better word. It's not really a tax credit, it's a deduction. So basically that means you're allowed to deduct whatever earnings you have in the country, in the United States. So what's better? Is a tax credit better than a deduction? And I thought I'd share with you an example which kind of brings this to light, and we can then have a discussion, which you then internally can have a discussion or with your spouse or your friends. So what I want to share with you is this Excel template, and I've got a few templates set up, but basically what I want to share with you is I've done some calculations that compares the UK. So if you're in another country, you are going to want to understand what the taxes are in those countries compared to the United States. Okay, so I've done that for the UK and US. Now, typically I would say that the UK does tax you more heavily than the United States. But in Hong Kong, it would be the role reversal. You would pay less tax in Hong Kong than you do in the US. In Spain and other countries, Spain especially, I think you're pretty much at similar kind of levels of taxation. Other countries, you do need to get a consultation on that. But what I've done is on the American 1040 tax return, I've entered the number of 163,784, which is the wages, tips, as you can see there, 163,784. But what we need to think, and this is coming from the income from the UK, so please note that, and I've just put that number in. But how much tax are you taxed in the States? And if I pop over to the 1040 tax return, this is a single person as well, and there's no other kind of major considerations there. But you can see on the 1040 tax return, there it is on the right hand side, it says wages and salaries, tips, and box number 163,784. Okay, how much tax do we pay if we earn that money in the United States? And the answer would be 23,448. Now that's that tax liability, but we would get a tax credit to offset against that based on whatever taxes we have in the United Kingdom. And what we have to do is compare that 23,448, because if I now go over to a different form, which is my 116 form, what I want to share with you here is that same amount of wages has been populated into this, but there's no tax liability on my 1040 tax return. And that is because if I go over here, I can see the same 163,784, which is what I put in previously. And I have a tax liability in the United Kingdom of £38,849. That converted to dollars is $53,456,000, which basically means I'm paying $53,000, or I have a tax credit, of $53,000. But in actual fact, if I go back to the actual form here, I can see I've got $23,000. So what happens then to the remaining, what, 30,000 equivalent dollars, which is significantly heavy in tax in the UK, and that just shows you how much tax you are going to be charged here in the UK compared to the United States. That credit, that 30,000 or circa $30,000 credit, would be carried back or carried forward. And again, I want to just share some of the experiences I have with these forms and how you can utilize this for your best interests. This is a publication. It's a long publication, as you can read, but this is instructions for Form 1116 in 2021. So relatively up to date, would you say? Even if it wasn't, if you're watching this video in 2022, 2023, 24, etc., it will probably be the same thing. So if we go down, you can tell how much I've read of this, but basically what we've got to do is look at the details about what happens with this 30,000 tax credit we've not been able to utilize. It says here, figuring the credit, line 10, enter the unused foreign taxes in a separate category for another tax year that are eligible to be carried forward or back to 2021. The amount of foreign tax credits carried forward in tax years is the amount on Form 116, Schedule B. Okay, so we know that it can be carried forward. So this is really useful. The tax credit, the foreign tax credit, is really useful when you're in a high taxed country like the United Kingdom. In I would say somewhere like Hong Kong, this probably wouldn't be true, whereby you would actually pay more tax in the United States. So you would have a foreign tax credit, but you would still pay more tax in the US. So what should you do in that position? Well, one of my suggestions I have is to use this simple document, which is the 2555 form, which is the foreign earned income, which basically says that you can take a deduction on your foreign employment income in the country, obviously where you're residing, but you also have a housing deduction as well. So it's not just the income that you have from your job, but also a housing deduction as well. And to save some time here, I've created another template, you'll be pleased to know, which is the 1040 255 example. So what I've done here, I've used the same 163,784, so I've not done anything different whatsoever on there. And basically what you're allowed to do is have a maximum of this foreign earned income exclusion of 108,700. And you'll notice that 108,700 is actually less than the $163,784,000. Hark, is there a problem here? Am I going to be paying tax into the United States to the IRS? Well, the answer to that will be no. And the reason for that is because we also have this housing exclusion as well. So depending on where you live, in whichever country, but in this example, we are using London in the United Kingdom, but you could be in Madrid, in Spain, wherever you are. You have to put in your allowances, and HMRC do have a great table for you to use to find out how much of a deduction you can get. But in this regard, we've got this 55,084, which is, if you add that to the 108,000, comes back magically to the dollars that we've described, the 163,000. And the reason why I've done it that way is because I want to share with you that you wouldn't have to pay tax on this $163,000 equivalent. But again, it very much depends on where you live. But from a income perspective alone, you are allowed this 108,700 exclusion from your foreign income. So this could be really useful if you're in countries like Dubai, United Emirates, if you're in Hong Kong, where the tax system is really very cheap in terms of tax. Your income is pretty much yours. But in the United States, when you do 1040 tax return, you don't want to be taxed on that. So using a 255 foreign income exclusion and the foreign housing exclusion could also be very good for you as well. So I think that utilizing this would be very useful for you. So that's absolutely fine to do that. The thing to bear in mind in here is where you get the most benefit. You have to do the analysis comparing the tax credit and the foreign income exclusion as well in order for you to really work out which one is best for you. Now, if you, let's say that you did the foreign income exclusion in this regard on the $163,000, would that be better than using in a high rate tax country like the United Kingdom? Well, clearly not, because if you did the 255, you would lose the foreign tax credit that you could carry forward, which is the $30,000 we use on the Form 1116. Now, that tax credit could be used against all taxes that I'm going to have in those countries. So even if I give up my job and I had investment income, then I could still apply that tax credit that I have of $30,000 using that Form 1116 to be carried forward against any investment income in the United Kingdom or other countries that I might decide to reside in. So in this regard, which one's best? Well, if you're a high tax country, the Form 1116 is far better. In my opinion, if you are in a low tax country, the Form 2555, the foreign exclusion, the foreign income exclusion is better for you. But again, you do need to work out which one is best for you. Typically, I would say look at your tax rates in your country you're residing in compared to that in the US. If it's higher, then use the Form 116. If the tax rates are lower in the countries you are residing in, then maybe you need to think about using the 2555 form instead. Hopefully that's been useful. Don't forget to press the like button if this has been useful, but drop me a comment and tell me which form did you use and why, the Form 116 or the 2555. I would look forward to seeing those comments from you. I do hope that you enjoyed that video. Please don't forget to press the like button on this video if you found it useful and subscribe so that you do not miss any future videos. But please don't stop there. We have plenty more content for you to watch, and I think that this video is the one that you should watch next.